Hey everybody, welcome. This video, my goal is to teach you how the stop limit order option works. Now, in order to understand this, it really is important that you understand these other two options, the limit and market orders. So we're going to crash course these real quick. If you already understand how they work, great, but I just want to make sure everybody is on the same page. So first, let's talk about market orders. This is the fastest way to get in or out of the market. When you do a market order, you are not guaranteed a specific price. You are basically willing to buy the Bitcoin at the going rate and sell it at the going rate. Limit orders are a little bit more strict and you often have to wait for them to be fulfilled. So in this situation, if you place a limit offer, you will either buy a little bit less than what the value of Bitcoin is currently, or you will sell a little bit higher than what the Bitcoin value is currently. So if you, for example, wanted to buy Bitcoin cheaper than the current price, which right now it's 9,290, you can put a limit order and that's going to go into your open orders, and you can see here I'm buying it for 9,170. So that obviously has not been fulfilled because there are other people willing to pay more than what I'm willing to pay. But if the price were to go down to 9,170, then my open order would be fulfilled. So that is how the market orders and the limit orders work. It just depends on your goal. If you're trying to get in or out of the market as quickly as possible, you will want to use a market order. If you instead want to be a little bit more strict and specify the price you're willing to pay or the price you're willing to sell for, then you would use a limit order. Now the stop limit is a little bit more complex, but the way it works is you're basically going to say, hey, I am willing to put a limit offer once the price of Bitcoin reaches a certain amount. So it's an extra layer of condition. If you come here from my programming tutorials, this is probably going to be natural because it's kind of just like an if statement checking on the price of Bitcoin. So we have an extra entry in here, and that is the stop. So you'll often see this when you're selling Bitcoin. Let's say the price stop is 9,100. And in that situation, we would assume that the price of Bitcoin is going down. So before it goes down too much and we lose everything, we want to put in an offer, let's say 9,050. And then we'll go down here and we'll just put some number here and place our order. So when you do that, that's going to go in our open orders, but you can see this extra condition here. When the price of Bitcoin is less than 9,100, then this is going to be converted to a limit order at 9,050. So that is functionally how it works, but now I want to talk about when you might want to use something like this so you can understand it a little bit better. So the first thing I would recommend is you hover over this question mark on Binance, and it's going to tell you a stop limit order is an order to buy or sell a coin once the price reaches a specified price. And you can get more information about it by clicking view more, and it goes into all the information of how you might want to use this. But basically, it is to prevent extreme loss of your cryptocurrency value. So to see a graph, this might show you a little bit better. Let's say you bought Bitcoin when it was really high and you were expecting the price to continue to go up, but unfortunately you were wrong. If you didn't have a stop limit order, the price could have crashed all the way down here, down to 7,000 or 8,000, and you could have lost a lot of money. With a stop limit order, you could have said, hey, if the price hits 15,000, then what I want to do is sell the Bitcoin. That would have basically prevented you from losing a lot more Bitcoin. This concept is known as cutting your losses, and basically you realize you made a bad decision and the price is going down. You want to get out of that before it's too late and you lose all of your money. Yes, you're going to have a little bit of a loss. However, if you get out of the market fast enough, you will not lose everything and you can still have some money to do some trading with. Now, if you have experience with long-term investing, maybe you have a Roth IRA or a 401k at work, you probably understand that you don't want to cash out or sell your investment when the prices are low. But here I am saying that you can sell when the prices are low. So what exactly is going on and what do you want to do? Well, it really depends on your investing strategy. And typically, if you're doing trades, you will want to cut your losses and not hold onto the cryptocurrency for an indefinite amount of time. The alternative investing strategy is holding the cryptocurrency, or what you might hear as HODL in cryptocurrency terminology. And basically, people who hold their cryptocurrencies are going to wait it out for the price to go back up. So going back to our graph, let's say you bought at 20,000 and it tanks and you're just like, oh crap, what am I gonna do? Well, what you're gonna do is you're just going to wait and over time hope that the value eventually surpasses your initial investment cost. So hopefully at some point in the future, the cost of Bitcoin is higher than 20,000 and you can get that money back out. These are two completely different investing strategies, and if you're watching this series, more than likely you're not going to want to hold your cryptocurrency until the price returns back to where it was. And the reason that is because of a concept known as opportunity costs. When you are just holding a cryptocurrency and not doing anything with it, you're not making trades, buying and selling it, it's just sitting there and it's not doing anything for you. So for the people who are holding out on the cryptocurrency, they gave up at this point 2 years waiting for that price to get back to where it was. If instead you decided to cut your losses and you got out halfway through this crash, you could have then continued to trade and hopefully got all of your money back by making profitable trades. So the opportunity cost of holding your cryptocurrency is that you can't use that money for other trades. Those trades could actually earn you more money than just waiting for the price to go back up. So all of that rambling to say that the stop limit can be used to cut your losses and programmatically sell your Bitcoin. So let's go through a simple example. So in the situation here, we have a stop limit order. The stop value is 9,100. If that price is met, that means we are ready to sell. We don't want to lose any more money. So what we're going to do is we're going to then create a limit for 9,050. This will assure us that if we bought our Bitcoin, let's say 10,000, and it tanks down to 9,000, well, we do lose some money, but we don't lose everything if the price continues to decrease down to, 1,000 or nothing. This is the best way to protect our portfolio from huge dips in value. If you're still not able to understand the value of this, start thinking about trading as smaller transactions. You're going to trade a little bit of cryptocurrency and make a profit. You're going to trade a little bit. Well, it didn't work out. You lost a little bit. But on average, you should get more wins than you get losses. So by putting a stop limit, you're able to ensure that you always have enough capital to continue to do these trades. So you don't want to trap all of your money waiting for the prices to go back to some arbitrary value. Now there is one gotcha when it comes to a stop limit order, and that is if the price tanks extremely fast. Like let's say it's currently at 9,200 something. Let's say it goes down to like 4,000, just as an example. Well, if the price goes down to 4,000 and you're trying to sell it for 9,050, well, that limit order may not be met. So in that situation, you continue to lose money because you were not able to sell your Bitcoin. The price went too low before your order was fulfilled. In this scenario, Binance says you have the ability to change this to a market order. It says here you can appeal to market orders to quickly get out of the trade, but I'm not entirely sure how that experience goes because I haven't had that situation come up yet. Basically though, if that happened, you would say, hey, I'm willing to accept less than 9,050, just get rid of this Bitcoin. I want to sell it, whatever the market price is. So I'm not sure how that works, if it's an automated thing or if you need to log in and click a button, but that is a possibility. So hopefully that helped you understand the stop limit as well as cutting your losses and opportunity cost and just the appropriate way to think about trading as compared to buying and holding cryptocurrency. Thank you guys for watching. Stay tuned for the next video. We're going to cover all kinds of cool stuff, so I'm just really excited. See you, and do me a favor, would you just subscribe to this channel? I mean, come on, what's the worst that's going to happen? You just got to put up with me putting these new videos out all the time, which is great, right? All right, stay tuned. I will see you in the next video.